Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Friday, August the 21st. August the 21st. Let's look at our news items for this morning as we begin our analysis. And we can see here today, Friday, we do have at 9:45 this morning, we have the flash manufacturing PMI. Reference to unemployment and to the CB leading indicator. The CB leading indicator did better than suspected. We did go over about 106,000 over our expected number of unemployment claims, and our Philly Fed manufacturing has slowed up just a bit. So there are a couple of disappointing numbers, but these were all taken into consideration based on the second wave. Remember, when we're looking at these reports, we're looking at activity that's happened in the past, and it's all based on the current situation during that time. Is that always an indicator of things to come? Now, let's jump into our analysis today as we begin looking and trying to take apart what's going on and trying to put an idea together of what we look like today. Again, market, all-time high, a little bit of consolidation. I'm still of the opinion that we're going to pull back a little bit stronger. I still think that right around the 33.18, 33.20 area, I think the market has potential to move a little lower. If you notice here, we started this channel here. You see how we went from the top to the bottom, from the top to the bottom, from the top. We haven't really had a significant pullback yet. So I think before we move any higher, significantly higher, I think we're going to see a bit more of a sell-off, just profit taking until about the 20 SMA. Notice how volume has picked up just a little bit after kind of tailing off there. We've had a couple of days where we have exceeded what we're looking as an average. Our ATR, once again, obviously is being reduced. There's less volatility in the market, and what it calls for precision trading. Precision trading. You need to understand when you need to participate. You need to understand where and why you're going to participate, and you need to understand, more importantly, where your stops can be placed to protect your weak side there. So with that in mind, let's jump into another time frame here. This is a time frame that I'm loving here. I've been using this for the last several months, and it's been fantastic. We have this trend line that began way back here in July. I don't know if you remember this. Trend line was way away from price. It almost seemed insignificant. But if you notice how the market is attempting to continue past the all-time highs, the new all-time highs, market retraces all the way back and it finds confluence in a former resistance that became support. This resistance area here was a channel. Market broke using a support, and you notice how it kept using a support. But now here we go. Here's a confluence again. We had this trend line. We had this to the downside. We had this support resistance level here. Market used it as support. Market continues to higher, and now all of a sudden, market returns right back to this area. So it's important for us to understand that these areas are there to give us an idea, a potential idea of the market movement, where we can expect the market to move. We don't make trading decisions necessarily on these particular areas, but it's important to be able to have a plan that you look at multiple time frames in order to really get the whole picture of what we're expecting. Now, again, this is not our trade chart. Our trade chart is more akin to the one I'm about to show you here, where we can expect, and here we go. Let's bring that chart up here. Here it is. It's right over here, and as you can see, right now we are below the intraday high and low. This is the intraday high of yesterday. This is the intraday low of yesterday. What you see here in between are market profiles. These market profiles represent the information from yesterday. We have a value area at 33.81, another value area here at 33.57.75, and a point of control is right at around 33.75.25. We use these areas here to help us confirm what we have already established as potential areas where the market can be moving in. So this tool has helped us to fine tune our recognition of areas. Now, what are we looking at here? We're looking at how the market just ran right into this area here, and if we look further back, you're going to see there was a former resistance area, which eventually became a support area. So that's why it's so significant to see the movement happening here. But look at the huge reaction coming off that area. So what are we looking at today? Well, market can move one or two directions, as we always know. The market can continue higher to test this particular trend line here to the downside, or it could potentially come down here to test the area, the value area, and then obviously the intraday low from yesterday. That's the immediate movement that we're looking at right now. Now, based on volume, we have just a little bit less volume that we did in the pre-market from yesterday, and we have very slow activity there at times in the markets. You can pretty much look at that kind of stuff. So in order to trade this market, you need to see conviction in this market. What does conviction look like to me? A continuation to the downside to retest this area here and see the reaction, or a continuation here where we start seeing higher highs and higher lows and a very clear and precise run to the upside. So that's a place for today. Have a great trading session and have a great weekend. Take care.